Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Swiss. Today's day is November 10th. We're heading in toward the weekend. So I'll take a broader look and a closer look at the technicals that are leading that currency pair. So let's get started. Focusing on the daily chart to start things off, what have we seen in this chart pattern? Maybe since the July. Let's call it the July low right here. Well, we've seen a corrective move to the upside. Again, this is of the move down here. This is a trend move to the downside, and we saw a corrective move to the upside. Now, that corrective move to the upside did get above the 38.2% retracement of that move to the downside at 0.9165. It did it in the month of September. It did it in the month of October. But since really about the 5th or 6th trading day in October, the price has been below that 38.2% retracement. We had a move to the downside that went down and retested what? The 100-day moving average. That's a blue line in this chart. And like the 38.2, we did tick a little bit below that level, but then bounced back higher. And we have been waffling lower and now higher in the month of November. In trading this week, the market range has been fairly narrow, but we did have our low price on Monday and have been seeing a rebound, and we could currently traded to a new high for the week in trading here today. So now in the process, the price this week has moved back above the 200-day moving average. That's a green line in this chart. We traded above and below it at the end of September and also into the month or at the end of October and into the month of November. And in trading here today, though, the price has held support against the 200-day moving average. Key point. So the bias is a little bit more to the upside here as the market digests what it wants to do next. We had great support at the 100-hour moving average. We had a failure above the 38.2% retracement. We're in between those two levels with this 38 up here, the 100 up down here, and but we are above the 200-day moving average. That's tilts a bias a little bit more to the upside. Now let's take a look at the hourly chart. And if we look at the hourly chart, here's the overlay of that 200-day moving average in the mid. As you can see, the price has moved above and below it in trading here this week. Now, and on the dip today, we came down to it and found support buyers. We also found support buyers near the 100-hour moving average. That's the blue line in this chart. So not only do we have the 100-hour moving average, we also had the 200-day moving average, and you might add the 50% retracement of the move up from the October low right here to the November high right through here. So a lot of activity going on right here near the 89.99 level. Let's add the 90 level, a natural level of support as well. So earmark that level, folks, the 90 level as a level of key support going into next week's trading, and a bias defining level as long as the price remains above that cluster of support. Now with the 100-hour moving average moving higher, the 200-day moving average, 50% retracement, all within about 5 pips of each other. That's as long as we stay above it, the bias is more to the upside. Now we're also moving above the 200-hour moving average and the broken 38.2% retracement at 0.9026, currently trading at 333. But as you can see, we've been trading above and below it. So it may not hold as much weight as this support level as a level that we can rely on, especially going into Friday. But nevertheless, the 200-hour moving average and 38.2 is a level that we would pay attention to going forward and perhaps build on here. If you're really bullish on the US dollar, bullish on the dollar versus Swiss franc, this might be a close level that you want to buy against. As long as the price remains above that level, then everything's okay. We could expect further upside potential. If the price were to move below, let's say to the 90.18 or below that level, then we should just get out of the trade and take your small loss. So that's up to you. That's your trading decision, but it is a risk-defining level here with the two technical levels in play. So overall, we know that the 200-day moving average, the 100-hour moving average, a 50% retracement, key support on both the daily chart and the hourly chart. On the closer support comes against the 38.2 and the 200-hour moving average as we head toward the weekend. Not so great and not so sure about that level, but if it does hold and you are more bullish on the dollar, then that's a level to lean against for a short-term trade, and then look for higher levels going forward. So there you have it, a detailed look at the dollar versus Swiss as we head into the weekend. Look at the daily chart, look at the hourly chart. My name is Greg McCloskey. Good fortune through trading. Bye-bye now.